received a few questions from our audience. Okay, let's answer one by one here. And for the first questions, I think is to Professor. And the question is, how does CRREM consider use of renewable energy if the carbon trajectories are based on location-based emission? Yeah. Professor, can you help us to
I hope I understand the question correctly. So if the question is how is renewable energy sort of getting into this? I mean, first of all, I think we have to differentiate or understand that it's not, I think, Talbot, you mentioned that quite nicely. It's not just about carbon intensities, but also energy intensities. And it's not looking at one or the other. You have, from a strategic point of view, to take into consideration both, right? And I mean, you can still have a property that has a high energy consumption, but is running completely on renewables, right? Is that a good thing? I mean, in terms of your carbon intensity, you might be fine, right? Because renewables have an emission factor of 0, hopefully. And then your carbon intensity is, even if you have an energy intensity of 1,000 kilowatt hours per square meter per year, you still are fine if that is exclusively run on renewables. So I think my first point is we should make sure we look at both parts, because in 2050 we have only a certain amount of energy available for real estate. Energy prices are soaring upwards, as we know. So it's going to be important for owners that are actually using their premises themselves, of course, but also for properties that are rented out to tenants to be competitive in terms of the energy intensity, not just because of the carbon footprint resulting of that, but also related to the energy prices, right? And the renewable energy is sort of just getting down your carbon intensity in that respect. And it's you can do that, of course, by renewable energy produced on site, or you can do that by sourcing market-based renewable energy from the grid, if that is possible. We would, of course, always opt in or advise to use the location-based emission factors and work on the energy intensity and renewable energy production on site, because that, of course, puts your property in a better position.
Okay, thank you, Professor. And we have a question for Kelvin. Okay, and understand the question is understand the difficulties of collecting the tenants' emissions. May we understand how Link will deal with this issue? Due to this category can contribute a big chunk of Scope 3 emissions across the portfolio. What is the percentage of tenants' emission can be collected currently? Yeah, Kevin.
Thanks. So I think the person that asked this question is spot on, right? Those Scope 3 emissions from our tenants' use of energy is going to be a significant component for our entire carbon footprint. And well, the way we're working on this right now for the Hong Kong portfolio is actually to engage each of our tenants to get them to share that information. So what we've done this particular year is to roll out green leases across the entire Hong Kong portfolio. And from that, we are encouraging, the green lease actually requires tenants to pick 3 environmental or social related indicators and report back. Right, share that information, of which some of those will be the energy consumption data or maybe carbon footprint and so forth. Now, in return, Link will also help out by providing information in regards to the environmental performance of the shopping center itself. So because, how do I say this? The tenant's energy consumption is Link's Scope 3 emissions, right? And then the energy consumption of my building, Link's building, is the tenant's Scope 3 emissions. So what we're seeing is that investors are asking tenants for their Scope 3 emissions, which is my emissions, and investors are asking me for my Scope 3 emissions, which is the tenant emissions. So by sharing this information back and forth, both the tenant and the landlord can report back to certain parties what their total footprints are. And we've been able to do this through Green Lease by, which essentially say, if you share yours, we'll share our information as well. just roll this out this year. It will likely take about 4 years to roll out completely for the Hong Kong portfolio, simply because we're introducing it primarily as part of the new leases or lease renewal engagement. There are some tenants that are willing to jump in now and do it. That's for the Hong Kong portfolio. We don't have a similar challenge for this in Singapore, mainland China, because we already have that tenant energy consumption data. That's already landlord information. So again, the long story short with this, to get that scope 3 emissions, it's really about engaging with the different stakeholders, in this situation, tenants. We can certainly apply this to also our suppliers and vendors as well, as we want to move towards embodied carbon too. So I'm hoping that within 3 to 4 years, we'll get 100% of our tenant emissions, tenant energy data to cover most of our scope 3 emissions.
Okay.
Dennis, if I may jump in here, because I think that's a really important point. There has been an obstacle or a pitfall for most markets in the past, in Europe and America, and likewise in Asia-Pacific, as Calvin pointed out, to get from an asset manager or investor's point of view, their hands on the tenant data, right? And of course, there's sort of this perception that the investor or owner of the property is not in a position to, control the tenant's consumption and so on. And it's, as we just heard, it's scope 3. I think in the end, it's still relevant to get that information, because you need to report on that according to GRI or other initiatives anyhow, because it's scope 3. And most regulation, and again, we are talking about transition risk, most regulation that is popping up at some point in time is always looking at the holistic, at the whole building. It takes a holistic view of the building, right? So even though if you sort of feel you are just responsible for the staircase, the base building, so scope 1 and 2, in the end, you might end up in a situation where you need to comply with, emission EPCs, energy performance certificates and stuff like that, that are looking at the entire building. So I think it's really important to address this issue anyhow. And also with regard to a net zero strategy, I always find it quite interesting if sort of the net zero strategy of big investor is just looking at scope 1 and 2. I think since it's just a fraction of the overall emission of the portfolio, I think I wouldn't call it greenwashing, but I think it's clearly just a fraction of what you should work on and look at, and might be misleading for shareholders that are investing in such a company, because they might think that having a net zero strategy would, of course, relate to the entire portfolio. And if you are just looking at this very tiny little fraction of scope 1 and 2, which is the case then for most investors, that would not be sufficient. I think it's important to make sure you are clearly communicating what is your net zero strategy, including, and I would strongly advise to include all emissions related to the properties.
Yeah, thank you, Professor. And we have questions also for Professor, like they would like to ask that does the update CRREM model provide carbon prices for Asia countries, and if so, where can they find be found?
Yeah, with regard to the carbon prices, I think it's important that for pathway calculation itself, obviously you don't need any carbon pricing. For the carbon pricing, we will have new projections that are included in the tool. They could be used as a default value if you have not made up your own assumptions, right? And they will be updated. They are basically aligned to global projections of IEA or so more global coverage. And of course, you can include, as Calvin mentioned, projections for specific countries that are available, where you already know some carbon pricing system will be introduced. As I said before, we will see in Europe also real estate being included in the carbon pricing system. It's not in yet. And as Calvin mentioned before, you have a small carbon price now. We have the same for real estate at the moment in Europe, but we would expect that the carbon price will sort of, for our sector, get to a certain stage that other sectors are already seeing, which is already 100 euros per ton. So it's we do have an update in the tool, but I would strongly advise market participants to really have a strategic company view on what their perception of future carbon pricing is in the respective region, because our tool really, it provides default data, of course, but we always encourage market participants to start this strategic thinking about the future. I mean, if we end up in a world where in 5 years, it could also be the case that we come to the conclusion that we cannot make the Paris Agreement, and we are in a world where everybody can emit again as much emissions as they like, and then of course you have a different scenario, right? So it's really making up your own mind of what the future looks like, and we provide some advice on that, but I think in the end it's the management, it's the company CEO and board of directors that should address this topic.
Dennis, may I jump in here as well and support what Sven said? I think that when we ran this model, there was no ETS in China at that time. And even for Hong Kong, we didn't have a carbon price. So for us, first of all, the number that we ended up using was the EU number at that time. I think it was 30 or 40 euros. So we discounted it based on we didn't have it in China. But if I remember correctly, Sven, you'll have to refresh me. We can actually put in whatever number we wanted as well. So we did run scenarios where whether it's going to be 30 euro, $30, $50, and $100, so that we can start seeing roughly what our exposure would be. How would that exposure change? How would the portfolio exposure change? And I absolutely agree with that point that I've said a few times, this is actually more of a strategic engagement. You don't need a model that is 100% fit for your specific geography, because as long as the assumptions are applied equally across your properties and jurisdictions, then from a standpoint of you can still prioritize everything. Right, so we have used this model to look at different scenarios, and we can manually update that information too.
Oh, thanks, Kevin, and thanks, Professor. And Kevin, I want to follow up your answer. How did you convince the management to use CRREM at the first place, and what consideration for you to introduce it to your management?
Well, frankly, we didn't have to do too much convincing to management, primarily because a lot of this question, as I mentioned, one of the key drivers for this was investors asking this question. Now, I would say that it doesn't mean that investors were saying, oh, you need to do this model. I think that at that time, European investors were, Sven, I think at that time, you guys were getting the European investors to understand what this was about. They didn't quite understand all of it. So what they end up doing is saying, hey, Calvin, have you been looking at CRREM? How are you factoring carbon risk into this? And then once an investor asks this question, I think it opens eyes, right? Then it's like, wait a minute, why are a large number of our investors in a particular geography asking this question? And it's either our IR team getting these questions or the CFO getting this question and coming back and saying, hey, what is this about? So I didn't have to do much convincing. As opposed, it was more of external parties asking the right people, how do we do this? Now, if I had to, let's say, convince, I think I would also use that argument that investors are looking at this. Take a look at your own investor portfolio. You'll get a good understanding. Are they located more in Asia? Are they located more in Europe or the US? And then from that, look at what those common, what the concerns are. Right, in Europe, the European investors are very focused on carbon. The American investors tend to be more focused on the social issues. Asia-Pacific, we're kind of in between, depending on who you ask. So looking at your investor composition will give you some insights into how much credence you put into carbon management. But I would say that for Asia-Pacific, looking at the carbon exposure, carbon risks, and opportunities associated with portfolio right now is probably a good strategic decision.
Yeah, great. Thank you, Kevin. And Grace, we have a question for you. Okay. One of the audience asked, can you model multiple improvement scenario at asset level to align with the science-based target pathways within CRREM, or does it require further assessment? And this question one. The second question will be, what level of energy data needs to be available to carry out this analysis? Yeah.
Okay, so well, I also saw a different question, like whether CRREM-2 can be, applied to the AA share portfolio. I think this is, the reason for this introductory webinar. And for scenario analysis for improvement measures, yes. But if you want to compare the same asset, with different measures, then you probably need to do it separately. So if maybe Sven, if you like to supplement as well, because for different curve of the same individual property, then probably we need to compare it separately. But for a combination or different scenario of the improvement measures, we could do it with the two. And for the energy data, definitely we need whole building asset level energy data, and that is one of the challenge for Hong Kong. But as Calvin has mentioned earlier, we are also trying to find solution to that issues, and hopefully later on we would have better data for the tenants that we could use, or in assessing the transition risks at the asset level. Thank you.
Yeah, maybe just adding to this briefly. Of course, the tool can also work with limited availability of data on an asset level. So if you have a data coverage of, let's say, 50% of the overall property, because you are not getting your hands on all tenant data, for instance, we have the possibility to have the extrapolation in the tool to work with this. Of course, not perfect data, but at least have some sort of first insights.
Yeah. Thank you. And we have more questions, but some of them are related to they want to know the location for the updates of CRREMs and where they can find the information. Probably for all those questions, we can send to our audience today afterward, and pretty much they can find all the answers there. Yeah. We will work with our professor for the location, and I think it's time's up for us. Definitely, I think with the response, we definitely will have another sessions to have more introductions, more sharings coming. Okay, and thank you for all your sharings, attendance. Yeah, thank you, Kevin. Thank you, Professor.
Thanks a lot. Bye-bye. Take care.
Thank you very much.
Thank you.
Bye-bye.
Thanks for setting this up.
Thank you.